At BMO ETFs, all our investment tickers start with Z. That's right, Z, not Z. From ZSP to ZEB, we build solutions for the Canadian investor. So next time you invest, consider a Z instead.
Hey everybody, it's Larry Berman here. Feeling a lot better this week. Very minor scar here. My wife says it gives me some character. So all good on that front. For those of you who have sent in some notes about that, thank you very much. Appreciate it quite a bit. So Powell, a little bit surprising for me here. I thought he would be a far more balanced. Market really sees him as a quite dovish given the response. So let's kind of have a look into the chart room and see what moved this week and see if we learned anything. So looking at the before and after is always good. So by the end of the day on Friday, a little bit less than certainty for a rate cut of 25 basis points in September. But what was clear here is the path expanded a bit. So you see by the end of next year, 5.25 25 basis point rate cuts is now in the curve. If we look at it day before, okay, it was 5. So equity markets said, wow, the front end of the curve was pretty much already there. So it didn't, the front end of the curve really didn't reflect the exuberance in the equity market is kind of my point. When we look at the back end of the curve, the long end of the bond market, it tried to rally too as rates, were coming down across the curve, but it was sold into. So I think you've got the setup here, perhaps of a little bit of a risk. I'd be very surprised unless we saw the labor side really take a hit. So next payroll report, 2 weeks from as we're recording today, and we'll get a sense of what happened in August. Claims data this week, fairly supportive in terms of we're going to get like an okay payroll report. It'll be probably a bit higher than the recent months where the revisions took everything down. TBD, we'll see that. But remember the breadth indicator of the labor survey, more than 50% of the industries are seeing job losses now. And while we're getting job gains still, it's increasingly fewer and fewer sectors. So that part is concerning, and probably why the Fed and Powell are open to starting to cut rates. So that's a big part of things. Equity markets like it for now. S&P 500 back up against the highs from the last 2 weeks. If we look at the equal weight S&P, boom, break to new high. So that very, very bullish there in that sense that it's broadened out. So the broader equity markets love the rate cuts. When we look at leadership in terms of tech, not the breakout, up against resistance, maybe I wouldn't say a little bit of selling. I said we just kind of lost some momentum last couple hours of the day. When we look at artificial intelligence, again, no new highs there. Why? Well, it's NVIDIA earnings this week. So another big data point on the 27th. We'll see what happens there. If NVIDIA can't keep going and break to new highs, the broader market's going to have challenge. Tech in particular is going to have a challenge, but we might see some breadth movement because the broader economy will benefit from falling rates, the consumer, et cetera, interest rate sensitive sectors, more of the value stuff than the growth stuff at this point. So that's kind of the message of the week. have a great week, everybody. Really, excited. End of August here. Long weekend coming up too. So, let's enjoy for what little time we have left of our summer.